are you just basically like the shops now where you see Christmas decorations in earlier every year? Is that why you're calling a Santa Claus rally when we're not even at Halloween yet?
It must be, Heidi, because I just drove down Orchard Road last night, and the Christmas trees and the lights are up. So I think subliminally that's what made me say Santa Claus rally. But I still think we're getting a year-end rally, whatever you want to call it.
What shape, I guess, does that rally take place in? Because we are starting to see that formation of a pretty classic rotation, right? More and more narrative about maybe value is going to come back into fashion, and we quite clearly see tech and growth suffering at the moment.
Yes, we do. And so I'm sure you know that the leaders every decade, they change in the United States. And so we're so accustomed to think that the leaders are stocks like Amazon and Google, but probably the next 10 years they won't be. And I think that the message in the way their stocks have reacted to the earnings is that they're simply too big now to grow a lot. So I don't quite know what the leadership will be. It looks like it's industrials right now. But I would say that for the broader market, we are comfortable in telling our clients that the bottom was 2 weeks ago, because we do think inflation is coming down. And the inflation is a complicated thing. It started with goods, and they're coming down, but now the services prices are very high. But we think that the services are starting to roll over. Of course, we had the Case-Shiller for August, the property index in the United States, but the apartment listing platforms are also showing rental prices have fallen a lot this month in October. Okay. So the Fed can't signal that it's over quite yet because headline CPI is still so high. But we can see which way the wind is blowing looking at the RBA, the Bank of Canada, and ECB last night.
So, Mark, if it turns out, though, that central banks, they say we don't have to hike rates aggressively. What if they just say, we have to hike them, but maybe not as aggressively, but keep hiking them? What if they don't stop right away? Can the market rally regardless, though, because they know, pricing out, 6 to 9 months, that's in the works and it's going to open the door for earnings to improve and all that?
Well, I think you answered the question precisely. We don't need rates to come down. I don't think. I think we can live with interest rates at around these levels. But what we'd like to see is the light at the end of the tunnel. And I think that's what we're starting to see now.
Okay, so with the light at the end of the tunnel, where do you put your money? Let's look at stocks. Is it U.S.? Is it an Asian market, Asian region? Europe looks like a little bit too much like it's heading for a recession.
Well, one thing that we haven't discussed is geopolitics, and unfortunately, they're just really bad, aren't they? So I think that makes definitely China and Russia off limits, and then Asia's a pretty hot place. So you're looking at countries where you're comfortable with the security, comfortable with the rule of law and transparency in companies. And so I think that takes you to the United States. It probably also takes you to Canada, Australia, Switzerland, Sweden, and then you would want to look at other places like maybe the UK and the EU and Japan, but they have their respective problems. So there is a list, and it's quite long. Singapore, by the way, would be one where you've got, it's far away from the potential problems, but it's got good quality of governance and strong economy, etc. So basically, I would say developed countries.
Mark Mobius thinks that COVID-0 is going to be lifted by the end of the year. I don't know why he thinks that, but if that happens, would that be a good enough catalyst to be back into Chinese asset opportunities for you?
No, unfortunately. I think the bunch of things came out of the Party Congress, and one was that they're not going to remove COVID-0. So if they do, obviously that's a good thing. But the other was there was no acknowledgement of the importance of a market-based economy. And I think that, what made China into the very rich country that it is today was their acceptance of a market-based economy. So if that's no longer the case, then it's not a market we want to be in.
Before I let you go, I want to know about your long-term call on India. Based on the metrics you were just talking about, developing nations, for example, why do you like India so much?
Well, there's two main reasons. The first is they did a whole lot of reforms over the last 8 years, which are now bearing fruit and essentially allowing tax collection to be at record highs. They've dragged the small and medium-sized enterprises, which are the bulk of the economy, into the official economy. So they can spend that money on building bridges and airports and highways and things like that. And the second thing is they have a dependent age population which is smaller than their working age population. That Rubicon was crossed 4 years ago, and that'll remain the case until approximately 2060. And if you look back at other countries, when the working age population was larger than the dependent age population, generally it was a sort of golden period. Japan was started in 1964, Korea 87, China 1994. So that's another thing we like.